Hey folks, it's Simon here. Welcome to Tao Daily for Tuesday the 25th of March 2025. Very quiet session on the markets on Tuesday. S&P was up 0.24%. The Nasdaq was up just over 0.5%. So, like I said, quiet session overall. However, there are a couple of developments that I want to highlight. The first one is that the S&P here has now recorded two consecutive closes over both the 200 SMA 200-day simple moving average and the 21 EMA. All right, so it's cleared an important potential failure point in this early stages of this rally. So probabilities remain good that we'll get up into this sort of 580 to 590 region that I've highlighted. Now, if we get through 590, we could actually start talking about targeting the previous high, but not until that level is breached. We'll have the 50 SMA coming in. We'll have a Fibonacci retracement level. This will be a pretty major area, okay, and probably a failure point for this rally. But we'll have to make that call when we get there. The other development that I think is noteworthy is this continued kind of risk on I'm seeing in terms of sector rotation. If we look at sector performance, for the day on Tuesday, you can see the worst performers were all defensive sectors. Consumer staples, healthcare, real estate, utilities, all massively underperformed. Communication services continues to be the outperforming sector. Consumer discretionary, energy, financials, industrials and technology to a lesser extent, but generally it is the more cyclical or the more growthy sectors that are outperforming, and certainly the defensive sectors that are underperforming. Something that I highlighted on Monday was MAGS, the MAG 7 ETF, that outperformed the S&P and the Nasdaq significantly. That was up 1.2%, again closing above both its 21 EMA and its 200 SMA. These are important milestones that are being achieved. I've been getting a lot of questions on Chinese stocks lately. Let's just take a look at one potential benchmark you can look to gauge the performance of Chinese stocks, and that is the US listed ETF FXI. Now, what we've got here is a potential bull trap. What I mean by that is you can see how we had a major high here. We came up, touched that high, rejected, then we broke through. And breakouts like this will suck in a lot of buyers who are trading the breakout. But when you get price breaking out above a key level like that, what's it not allowed to do? It's not allowed to trade back below that level. You trade back below that level, all of the people who bought this breakout start questioning whether it's a real breakout or whether it's a bull trap. Right now, FXI is looking like a bull trap. And as these breakout buyers get their stop losses hit, that will tend to help to depress the price further. That's what I got for you today, folks. I hope it helps. I wish you good trading, and I'll catch you next time. Thank you.